Welcome back, chart enthusiasts, to Explain the Charts, your dedicated hub for in-depth market analysis and strategic insights. Today, August 6, 2025, we're putting the spotlight on a titan of the tech world, Microsoft, trading under the ticker Microsoft. This stock has been particularly dynamic, especially with its central role in the burgeoning artificial intelligence sector, which has directly influenced its remarkable and sometimes volatile price movements. Our mission today is to thoroughly dissect MSFT's chart data, identify critical trends, potential reversals, and pin down key support and resistance levels. We'll also explore the reasons contributing to both bullish and bearish sentiments, offering insights for both short-term tactical trades and long-term investment strategies. As we open up the full daily chart, spanning from March 2024 to the present, you can immediately observe the remarkable and sustained upward trajectory that Microsoft has carved out over the past year. This broad view sets the stage for our detailed analysis. Fundamentally, Microsoft's narrative is exceptionally strong, primarily propelled by its unwavering commitment to and success in artificial intelligence. Their latest fiscal Q4 earnings report, delivered just days ago on July 30, 2025, significantly outstripped Wall Street's expectations. This stellar performance was largely attributed to the robust expansion of their Azure cloud platform, with AI-driven services leading the charge. Furthermore, the introduction of Microsoft Fabric, their innovative data analytics platform, has rapidly become the fastest-growing platform in the company's history, highlighting its profound impact and adoption. This string of successes recently propelled Microsoft past the monumental $4 trillion market capitalization milestone, placing it in an exclusive club alongside industry peers like NVIDIA. Analyst sentiment echoes this optimism, with several top financial institutions upgrading Microsoft's stock rating and raising price targets, some even projecting values as high as $650 per share. These compelling fundamental drivers are the bedrock of the consistent bullish trend we observe on the daily chart, reinforcing the deeply rooted long-term investor confidence and market leadership. Let's zoom in on the price action from early May 2025 to grasp the immediate aftermath of these significant announcements. The daily candle for July 31st vividly captures the market's initial euphoric reaction, showing a substantial gap up from the previous close. Price surged to a new 52-week and all-time high of $555.45, confirming the overwhelming bullish momentum fueled by the outstanding earnings and future AI prospects. However, this peak proved fleeting as a sharp reversal immediately followed. The very next trading day, August 1st, saw a considerable bearish move, with the candle closing well below the prior day's open, creating a stark bearish engulfing pattern on high volume, confirming aggressive selling. This rapid retreat from the peak suggests that while the earnings were stellar, the market quickly began to price in potential long-term challenges. Concerns such as Microsoft's substantial capital expenditure projections, notably the $30 billion for the current quarter, alongside intensifying competition in the AI sector from companies like Google and Oracle, likely contributed to this profit-taking and downward pressure. The $555.45 level now represents a very strong overhead resistance that bulls must overcome for any sustained upward continuation. Shifting our focus to the one-hour chart provides a more granular perspective on the significant pullback observed since late July. The initial drop from the $555 high was undeniably sharp and swift, characterized by large bearish candles accompanied by notably elevated selling volume. This clearly indicates strong conviction from sellers and notable aggressive distribution. We can identify several immediate support zones where price found temporary footing. Most prominently, the $520 to $524 range, specifically the low of $520.86 established on August 1st, has acted as a key pivot point, serving as a retested area of temporary relief for buyers. Subsequent attempts to rally higher, such as the move towards $538.25 on August 4th, consistently encountered renewed selling pressure, ultimately failing to sustain upward momentum. Yesterday, August 5th, further solidified this short-term bearish bias with another significant push lower, culminating in a close around $527.75, which is a significant bearish signal. The overall hourly trend since the peak is defined by a series of lower highs and lower lows, confirming that bears are currently dictating the short-term direction. Traders looking for potential long entries should keenly observe the $520.86 support level. A decisive break below it, especially on high volume, could indicate a deeper correction is underway. Diving into the minutiae of the last 2 days on the 15-minute chart reveals intense intraday volatility and a fierce battle between buyers and sellers within a tightening range. We observe periods of consolidation, particularly within the $527 to $538 range. On August 4th, after an early dip, Microsoft demonstrated a commendable afternoon rally, touching $537, but critically, this upward momentum was not sustained into the closing hours. The trading session on August 5th painted a distinctly bearish picture from the open, characterized by several consecutive 15-minute candles showing clear downward pressure. Notably, volume remained elevated during these drops, confirming active selling interest. The low for August 5th settled at $527.24, which serves as the immediate, crucial intraday support level. For very short-term traders, the focus should be squarely on whether this $527.24 support can withstand further selling pressure. A breakdown below this point would signal continued weakness and likely lead to a swift retest of the stronger $520 hourly support. Conversely, a reversal in intraday sentiment would necessitate strong buying volume to overcome the immediate resistance levels around $532 and $534. So, how do we synthesize this information for MSFT's future trajectory? From a long-term investment perspective, the fundamental drivers, particularly Microsoft's dominance in AI and cloud computing, remain incredibly compelling. This suggests that the current pullback might indeed represent an attractive buying opportunity for long-term holders aiming for analyst targets exceeding $600. For short-term traders, however, the stock is unequivocally in a corrective phase from its recent all-time highs. The critical price levels that demand your closest attention are as follows: the significant overhead resistance at $555.45, the immediate support at $527.24, and the more robust support zone around $520.86. If Microsoft can successfully hold above $520.86, we could realistically anticipate a period of consolidation followed by a gradual recovery towards $535, likelihood 60%. A definitive breakout and sustained close above $535, especially if accompanied by surging volume, would indicate a strong short-term bullish reversal, paving the way for a retest of $545 and then the all-time high of $555.45, likelihood 50%. Conversely, a decisive break and daily close below $520.86, particularly with high selling volume, would likely trigger a deeper correction, potentially pushing the price down towards the $490 to $500 range, where previous strong resistance might transform into new support, likelihood 40%. Important events to monitor include the upcoming dividend ex-date on August 21st, which could create some short-term selling pressure. Any new developments concerning Microsoft's substantial capital expenditures or shifts in the competitive landscape of the AI arms race will also be pivotal in shaping the stock's future. Always remember to integrate proper risk management into your trading plan and validate these technical signals with correlating volume data. That concludes today's comprehensive analysis of Microsoft here on Explain the Charts. We hope these insights empower your trading decisions.